we think of the Fed raising rates and calling it a tightening cycle. In fact, we haven't been in a tightening cycle yet. We've been in a normalizing cycle because they, maybe are back to neutral now or getting close to it, but they weren't when they were at 1, and they, weren't when they were at 1.5. So it's definitely different. And I think, as they get near the neutral rate, the tightrope walking becomes a little bit more of a challenge for the Fed, but that's the normal part of it. That's where the Fed has some history, hopefully not overshooting at any point. So
you think one more in December, then 2 next year, and that would get us to neutral. And is that enough? You point out that the Fed isn't necessarily, it's not their mandate to stop at neutral if they see inflation on the horizon, or if they see something else that causes them to think that neutral is not the right rate. They can always go above neutral. That could be part of their policy.
Certainly, neutral is not a stopping point. It can be, it can go into a tightening cycle from there, but that's all really dependent upon what happens from an economic and an inflationary perspective. And at this point, our outlook would be for the economy to have peaked, start to go back, a little bit further, a little bit lower from a GDP perspective, a little bit lower from an inflationary perspective, and as such, maybe neutral is the right place for them to stay for a while.
When people ask you about the 2 and 5 years, at cocktail parties and the inversion, what do you have a good reason for it? And is it ominous? Does it portend anything that we should be worried about?
Well, it definitely pretends a recession, but it's not a recession that's imminent. It's a recession generally that, can take a year, maybe 2 years in the making. So I hope that's not necessarily always the cocktail conversation, but when it is, the patience is a virtue type of response is generally what we like to end up with. And I think at this point, we're pretty flat from a yield curve perspective, and not really seeing a recession on the close horizon.
This guy Saut, Sorkin, Jeff, right?
I've heard of him.
Because you ask all the time, well, what should we be doing? Did you see what should we be doing with our money? Did you see what we should be doing with our money?
Why don't you have him explain what
2 words. With money? 2 words. Buying stocks. I mean, this is all very simple here, Jeff. Buying stocks. How would you characterize this market? A earnings-driven secular bull market. I mean, I'm going to go back to Deborah. So that's because we're done. No, but is it that simple, Jeff? When everyone's losing their mind around you stay cool. Is that it?
That's exactly right. The Wall Street Journal carried a story the other day that said valuations are the cheapest on a worldwide basis as they've been in a decade. They say the worldwide PE is down to 13.3 on next year's earnings. I think that's right. I think we've put in a undercut low just like we did in February. You undercut the October 29th low last week with that print at 25.83. If that low holds up, I think you've started the Santa Claus rally. I agree with Deborah. I actually don't think the 2 to 5s or 3 to 5s or even the 2 to 10s is the right yield curve. I did a conference call with Ned Davis a couple weeks ago, and I asked him when he started talking about the yield curve, I said, Ned, you've been in the business since 66. I've been in the business since 71. The real yield curve was always the 3-month T-bill to the 30-year T-bond, and that is nowhere near inversion.
Hey, Jeff, let me ask you this. In October, when the market was down, I put some extra money to work into the S&P 500. In November, I did the same thing. In December, earlier this month, I put in just a very little bit. And here's my thought process on it. It's not that stocks look any more expensive or they look better than they have in a long time. But you start to wonder if the market's down 10%, it could drop another 10%. And then what if I don't have any cash left to put into it when you really get those bargains? And maybe that's something people are thinking about, too. You're not saying that this is necessarily a bottom, right?
I do think it's a bottom, Becky. We had on the show, as a matter of fact, on October 2nd, we had on our short-term proprietary model a sell signal. And we told people if you had trading positions, you should sell your trading positions. So we raised a decent amount of cash, and we have put some of that money back to work, just like you did. And I think it's going to pay off as we get into 2019, because I don't think the economy is going to slow that much. I continue to think earnings are going to come in better than most people expect, and I think people are underinvested.